get across markets now with Peter Mcguire, who's joining me from XM. Pete, hi, nice to see you there. Well, you just can't keep these markets down, it seems, when it comes to equities in the United States. Give us the rundown.
Absolutely, Nadine. I mean, last week was extraordinary. I noticed you mentioned Russell 2000 up 8.5% for the week. Showtime. I mean, just extraordinary. Dow, Nasdaq, S&P 500. I mean, you bounced through 5,000, and then the velocity to get to 6,000 was just, I think, unheralded. I've never seen a market so hot. So yeah, it's plenty of momentum. Obviously, the market enjoyed the Trump victory, and how we move forward from here. Let's wait and see how it is by the end of the year. But at the moment, it's very, very bullish.
Okay, so very, very bullish for equities, the small cap space in particular, corporate tax cuts, deregulation. However, have we seen it in different sectors, Peter? And I'm thinking about oil. I'm thinking about the new president, so the incoming president, I should say. His view on drill, baby, drill. Like, have we seen any sort of expression of the U.S. election in oil prices, or are there different drivers there?
I think there's many different drivers. I feel as though from an OPEC perspective, let's put some numbers across it. So for the viewers, Nadine, 22% of the global production is coming from the United States, 64%. So that's 22 million barrels a day. The next player is Saudi Arabia at exactly 50% of that, at 11 million. That's the might of the US powerhouse as far as energy. Under the current administration, 64% of that is shale. President Trump wants to boost that. It could go to 80%, I've heard, or 85%. I wouldn't be surprised. Maybe he hit a target of 26 to 30 million barrels a day. So he's going to become totally energy independent. Next part is LNG and the impact that's going to have as far as the largest producer in the world. And that'll shake the likes of Australia and Qatar. And I think it's going to be a race to the bottom as far as price. So that's going to be very popular in the sense where it's inhaled from the consumer across pretty much America and anyone that wants to buy their product. So that's going to be a big plus, and he'll do deals with countries that are prepared to work with him from a tariff perspective. So it's going to be absolutely outstanding, I think, for the consumer, and that's the plus that we all want.
And we will get retail sales data coming from the US this week. It's a very data laden week, and I say that knowing that last week sort of took the cake. But we've got producer prices, we have consumer prices in the US, we've got retail sales as well.
Yeah, you betcha. I mean, I'm looking forward to seeing those numbers and how they present. And that gives us a lead up naturally to the end of the year as far as Christmas and the absolute health of the US consumer. So that needs to be really pulled apart and just examine it, because the numbers don't lie. And that truly tells us, what's the fabric of it? Is it relatively strong still, or is it under pressure? And then naturally, as you mentioned, CPI figures, PPI, and then all of that needs to be looked at in the chance that you do see another rate cut in December. Fed Chair Powell knows it's a weak NFP number. He knows that there's structural weakness across the employment market. So is that going to be, again, another key driver to push rates lower in December?
Okay. So one other impact of this Trump trade has been strength in the US dollar, which has not been great for the commodities complex and, of course, put some pressure on our market here. So what's your view, Pete?
Well, base metals got pushed down, and you're nearly at that 104.50 to 105 sort of handle. That's where it's oscillating between for the US dollar index. Euro, Aussie, naturally any commodity trading currencies are being crushed, and there the chart tells a story, and there could be a 106 handle there. I mean, you look at the numbers there, it's above those moving averages. You're up over the 200-day, the 20-day, and the 50-day. So it shows that there's momentum for that US dollar, even with the rate cut. And there's only a 20% probability of a rate cut in December, 25%. So that's the number there. You'll notice that yields are well up, 10 years up 60 basis points approximately from the September before they had the rate cut in September. So that's an enormous move now to around about 4.3%, Nadine.
Okay. Now, Peter, when it comes to the ultimate Trump trade, some say Bitcoin, others say Dogecoin. How have the cryptos performed across the board?
Well, if I look at Bitcoin, I mean, it's through 80,000 this morning. It's 80,300, Nadine. You're up from those 67 lows that you were experiencing there. So the chart tells a story. I mean, it's just Ethereum, 3,100. Or nearly 3,200, Solana. The list is so great. Even a dinosaur like me, Nadine, I get the picture. I understand it, and I understand what the rhetoric coming from President Trump is. He's an endorser of that particular asset class. And when you've got that sort of, I suppose, pronouncement, he's telling you what he's looking at, and naturally that's going to be an impact as far as US dollar and all of those sort of things moving forward. So yeah, I think it's just hold on and hang on, because we haven't seen anything yet.
Well, yeah, really looking forward to it. Hey, could you just give us a bit of a preview of what we might be able to expect across the Asian region today? I do note that we had that stimulus announcement from China. The consensus seems to be that it was disappointing. So where do you see the drivers of market sentiment across Asia and Australia today?
I want to look at Japan. I want to see what impact naturally the CSI 300 is, and all across the China equity markets, Nadine. We're looking forward to seeing it open over the next couple of hours, and then get a real read, market interpretation, and whether it's, there's a bounce to the upside or there's going to be a sell-off. So we understand how China plays. We're conscious as far as how they're going to try and get themselves out from a deflationary spiral that they're in. And it's, they've got, overhang of 90 million properties. Who's holding the debt? All of these factors are starting to come home to roost. So, yeah, it's going to be a very tough time, I think, for China, and especially with these tariffs coming in. Keep an eye also on the Nikkei today. I just want to look at those markets and, the likes of Philippines and Vietnam and so on.